Invigor Book and Buy ends November 14th. Run, don't walk to invigorbookandbuy.ca to find out how to get $30 off per bag. Terms and conditions apply.
It's time for RealAg Radio on Rural Radio Channel 147 on Sirius XM. RealAg Radio and RealAgriculture.com is your home for insight and analysis of the issues that are impacting your farm business. Let's get real and get connected with RealAg Radio. Welcome to RealAg Radio here on Rural Radio 147, Sirius XM. Shaun Haney, your host here on this Tuesday edition of the show. Hey, thanks so much, everybody, for making RealAg Radio and Rural Radio 147 a big part of your workday. Also, a huge shout out to everybody listening out there on the RealAg Radio podcast. Well, it is November 4th. Yes, believe it. Today, we're going to hear about the Canadian Farmer Sentiment Index results for October. What did you say, farmers and ranchers, about what's going on your in your operations from a financial perspective, your willingness to invest capital, direction of the markets, and a whole lot more. We're also going to have a product spotlight with Syngenta Canada. Wayne Bennet will be with us. We've got Jake Leguee, who is a farmer from Fillmore, Saskatchewan, frequent guest in the Farmer Rapid Fire. Well, today he's representing Sask Crops. He is the president of Sask Wheat. Sask Crops and APAS last week communicated a release on some changes that are needed. I think we talked about this on Friday's show. Want more data, more transparency in regards to weekly export shipments to be more in line with the U.S. and the EU. We'll hear what Jake has to say about that. We've also got Trent Klarenbach with Klarenbach Research. He's a technical analyst. We're going to talk about some land values in Canada as well. We're going to dig a little bit into some of the commodities that are speaking technically to him in a good way. Remember, there's a difference between technical analysis and fundamental analysis, and Trent brings that technical side of the equation. Now, if you have any feedback on today's program, we'd love to hear from you. I want to hear your thoughts, your feelings, your rants, your perspectives, questions maybe, whatever it is. I want to hear from you, everybody. You can send me an email. shaney@realagriculture.com is my email. You can also call or text. Okay, call or text the RealAg feedback line, 855-776-6147. Keep those producers in Nashville for Rural Radio here on their toes by clogging up those lines. Okay, let's get a little bit. That's our winter goal. That is our winter goal. We are going to get more volume through calls or texts to the RealAg feedback line. I want to hear more from you. You know, when I run into you people out about in conferences and conventions, and tonight, right after this show, I got to rush to the airport. I got to get to Toronto because tomorrow I'm at the Canadian, the CAMA meeting, which is it's the big agri-marketing meeting of the year. I'm doing a fireside chat with the head of Canadian operations for Corteva, Laura Lee Orr. She was the agri-marketer of the year last year. And so we're going to talk about her career, a bit of a sit down for, I think, about 45 minutes. Looking forward to doing that at the Level Up conference that CAMA is hosting before they have their big Best of CAMA. Now, back to the initiative here. I run into everybody, and you've got thoughts when it's in private. You've got, I like this guest. I didn't like that guest. I liked what you said here. I actually terribly disagree with you on this other point. That's awesome. That's the stuff I want. Okay? You should have asked this question. I didn't like this answer. All of those things. Here's what's really happening. Your guest said this. I think they missed it because there's another variable that's having a major impact on this issue. Many of you you're on the ground. You're in the thick of it. You're in the fog. Right? You're fighting these issues on a daily basis. And so you have real perspective as well. So I want to hear from you. That is our winter mission here as we turn into November. We're going to get more volume to this RealAg feedback line. I challenge, maybe I got to start giving out RealAg swag for people that start to call and text the feedback line. Maybe that's what we should do. But you know what? We're doing that for the rest of this week. If you text or you call, I'm getting you a hat, a RealAg hat. We got some new hats that came in. They are fresh out of the box, shipped from our distributor. You're getting a hat. If you call or text this week between now and this coming Sunday, a piece, not now, don't mail it in. Don't do like this is Joe from Saskatoon and I like the show. Hey, that's great. But I want to hear what you have to say, Joe. Okay. Or Peter from London or somebody from Abbotsford. Maybe it's Todd from Abbotsford. Doesn't matter to me. I want to hear your feedback. 855-776-6147 is the Real Ag feedback line. Well, I am still in recovery. It was a hard weekend, everybody. It was hard. Friday, a couple of you said, well, you got what you deserved. You guys were getting ahead of yourselves. You were gloating on Friday about the Blue Jays were going to bring home this World Series. Was not. If you go back to the tape, I said multiple times, the fourth is the hardest to win. Friday night's game, that ball in the wall, I think the ump screwed up on that. I think the ump should have gone over there to see if actually how lodged it really was. And then Snell at the parade was like making fun of the fact that they had sort of put their arms up about the wall, sort of like spitting in the eye of Major League Baseball. I thought that was pretty. I thought that was kind of uncool. Dodgers they have some really likable players. Snell is not likable. I'm sorry to say it. They have like when you've got Mookie Betts and Freddie Freeman and Clayton Kershaw, like there are some very likable players on that team, even though they are the big bad Dodgers with the $400 million payroll. Snell's unlikable. Then Saturday, in the ninth inning, I felt the jubilation of victory twice, where I jumped out of my seat. I felt like I was like lifted out of the air. We are winning this thing, and it's just stolen from you. It's kind of like when you got that big yield out in the field, and then the big white combine comes and mows it down. That's how I felt a couple times during that ninth inning. I had thought to myself when they didn't score in the 10th, they're flirting with disaster here, where they're getting, the 9, you get to Rojas at 9, Ohtani at 1. And, Ohtani didn't become the problem. That wasn't the problem. Will Smith was the problem. And, it was tough. But hey, you know what it really does? And I've seen lots of here's what it tells us about Canada and all. I think it's one of the things the mainstream media is really screwed up on. They want to kind of continue to make this about this was Canada uniting around a baseball team and from a nationalistic perspective against some of the mean things that Donald Trump has said. No, there's just a lot of Canadians that love baseball. It wasn't about that at all. I think the New York Times had a story that was just whatever. Why do we keep on doing this? There's 40 million people in the country of Canada. Baseball's a growing sport. And people are pretty passionate about their Blue Jays baseball. It's a whole country cheering for a team, everybody. Anyway, what we did learn, I think, there's one lesson I would pull out here is the little things really matter. IKF in that slide, just a little, five more inches, just a little bit more. Kirk's bat not breaking. Although the pitch before, you were worried that he was going to ground out because he almost grounded out in the foul ball before that. Ernie's hit in the 10th, bases loaded. Or was it the 9th, bottom of 9, where the big catch by Pagas over in center field where they almost crashed. They crashed into each other. Him and I think it was Kiki Hernandez. But then there's also the things that worked out, the little things, like Vlad making the diving catch that hit down the line. I think it was the 3rd inning. There was that play. There was also the crazy catch by Varsho a couple times in the series. It's just the little things make such a difference. A lot of times we think about the big things, right? It's the big differences that matter. A lot of times it comes down to the little things that make the massive difference in the end. But what a year of Blue Jays baseball. The good news is We're not too far away from February 15th when pitchers and catchers report to spring training. It's right around the corner. We're just not used to, as Blue Jay fans, the offseason being so short. And now Ross Atkins and the team and management over the Blue Jays have a lot of work to do to try to put next year's roster together. But I hope you enjoyed it. It was heartbreaking, still getting over it. The losses hurt way more than how good the victories feel. I think that is fairly common in competitive sports. But this loss, it hurts. And to the Dodgers. Oh, anyway, let's get to some ag talk. You're listening to RealAg Radio. When we come back, we've got the Canadian Farmer Sentiment Index results for October right after this quick break.
I am Lindsay Smith. Joining me now, Tim Dara, canola technical strategy lead for DeKalb. This is the time of year where we're sitting down, we're looking back at 2025, thinking forward to 2026. How then do the reps and DeKalb really help growers make the final hybrid decision?
They really do spend a lot of time out in the field looking at these products and getting to understand them. And I think one of the things we don't shy away from when we're looking at data or looking at trials is there's wins and losses, and we talk about them all because you learn as much from a loss as you do a win. You really get to understand where those products are supposed to be grown and where they're going to fit, and they really get in and get their hands dirty and get that understanding. Having that conversation with them, they're going to be able to talk to you about your farm and what kind of situations and what kind of challenges you have, and be able to help guide you in that choice in terms of finding that right product. We've actually leaned into AI just a little bit, and we've got a tool on our website that allows growers to go through and input some of the challenges that they have, kind of information that they want to have, guides them towards a selection. So that's DeKalbSeedSelector.ca.
I get to spend every day talking to farmers in the ag industry through RealAgriculture.com and RealAg Radio. But nothing is more fun than speaking to an audience live and in person. If you're planning an ag event, book a Real Agriculture speaker to make it a successful and memorable experience. Email shaney@realagriculture.com and you can book myself or any other Real Ag personality to speak at your event. Bring your audience all the fun, insight, and energy of Real Agriculture. From nutrient management to the latest weather, market, and ag trends, The Dirt, an economics podcast, is your place for farm smart topics to boost your profitability. Join host Mike Howell on Season 4 of The Dirt podcast, available now at nutrient-economics.com. Had a chance to hang out with Mike Howell in North Carolina a couple weeks ago. We had a really good time. Had a fantastic panel, and it was a lot of fun. Great guy. Big Mississippi State fan. Indeed. And maybe we should get him on here on Agronomic Monday. That'd be a lot of fun. He's a great asset, and so on top of agronomic issues across North America. Okay, let's get to the Canadian Farmer Sentiment Index and find out kind of what you said. How are you feeling about a number of different questions that we ask here on a quarterly basis? And the reality is that it seems not a lot has kind of changed here since July. So if we look at the Canadian Farmer Sentiment Index when it comes to current farm financial performance, now remember, 100 is neutral, above 100 is positive, and below that 100 line is negative. So when we ask about current farm financial performance, how's your farm performing financially today versus 12 months ago? We're pretty flat to the past couple quarters. We're at 64. We were 62 and 64 the prior two. So we really have not changed, but it's relative to where we were 12 months ago, which means farm profitability is declining across the country. We look at future farm financial performance. How is my farm going to perform financially a year from now versus today? We're a little bit more positive, but we're still net negative. We're at 71, which is slightly below 72 in July, and it was 74 in April. So we're slowly sliding lower when it comes to both current and future farm financial performance. The next question, the third question that we ask, is relative to optimism towards the Canadian ag economy. Will we have widespread good times or widespread bad times in the next 12 months? We ticked a little bit higher, but we're still relatively pretty low at a 46 out of 200. So Canadian farmers not seeing widespread good times here in the next 12 months. But what about the next 5 years, 60 months? That's a wider window. We should feel a little bit more optimistic there. And we do at 65, which is up from 62 in July and 64 in this past April. But still, we're not feeling very optimistic about the next 5 years. And there are some concerns that farmers have. Some of that is regulatory, some of that is trade, some of that is inputs. Now, on the livestock side, which we're going to talk about in the coming weeks, livestock feeling a lot better about things, especially the beef sector. It's the cropping sector that's been dragging these numbers down, which makes a lot of sense when you look at some of the farm profitability numbers. Okay, so then we asked, what's your confidence in making farm investments? Is right now a good time to be making investments in capital, whether that be land, maybe it's buildings, it could be equipment. And we're at a 57 out of 200. That's slightly up from 55 in July. It was 60 in April. And so does that mean people aren't going to make farm investments? No, it just means right now is not a good time. This is one of those questions where I wonder if it's ever a good time. What would the good time need to be? What would the context, the environment have to be in order for us to feel like right now is a great time to infuse some capital into the industry based on some of the challenges that are out there. Confidence in marketing crops. How confident am I in my ability to market my production? We're up to 89. That's up from 79 back in July. It was 77 back in April. So we're getting a little bit closer to neutral there. I feel positive about this number, and I've said this a few times when we're close to this 100 neutral number. This is a challenging time to market your commodities, right? We've got a lot of geopolitical challenges. We've got the weather is always a burden and creating an influx of problems for us to have to deal with. Trying to figure out the supply leading up to harvest can be a challenge, especially on that canola crop. In 2024, surprises to the downside. 2025, canola surprises to the upside. So maybe you thought you were like 30% sold going into harvest, and you now are maybe 20 because the yield really, really surprised you to the upside. So there's challenges. This is not easy. When the market goes up and the market goes down, we need to have confidence in our plan. And right now we're pretty close to neutral at 89. The most positive number on all the questions that we've asked about is outlook on selling crops. Is now a good time to hold, or is now a good time to sell? We're at 135, so that's up from 105 in July. It was 109 in April. It was actually 103 last January. Even this time last year, we're at 121. So we are a 12-month high on this index number. We're at 135 out of 200. And I think there's some reasons for this. Now, there are some bullish or reasons to be long the market for a lot of traders here right now in terms of maybe what happens with that U.S.-China trade deal. There is an example. That is a little bit of a factor for sure. I know there's a number of analysts that do feel, and they have felt like even going back to midsummer, that soybeans do have an opportunity to the upside. But I think there's a little bit more at work here than just, hey, are commodity prices going higher? I think, and in the coming weeks, we'll break down a little bit more of the West versus East on this answer. I'm going to speculate that the West farmers answered this more positive than the East farmers because they are going to be holding, because they're not happy with the prices right now because of some of the tariffs on things like peas and canola. So right now is a good time to hold because they're not happy with the current price based on some of those tariffs and geopolitical factors. So I kind of wonder if that's what drove this number higher, at least in the short term, but we'll get a reset and a relook when we get to the January Canadian Farmer Sentiment Index survey. When it comes to mental health, 93, we're flat to where we were in July, slightly up from where we were in April at 85. So 93, very close to the neutral point there indeed. So now that we've had a look at the index, let's look a little bit deeper into one of the areas that I think is top of mind for a lot of producers, and that is cost cutting. And we'd asked some of these same questions a year ago to get a handle on, where are some of the areas where you're looking to cut some costs heading into next year's growing season. And for those of you that are watching on YouTube, you could see a slide here comparing 2024 to 25. There's not a lot of changes here when we look at some of the cost cutting relative to financial performance. We do see more of an inclination in 2025, more people saying that they're going to be reducing spending on equipment. It moved from 3.86 in 2024 to 3.93, so a slight increase there. Also, farmers are more likely to be using more generic products in a year like 2026 up ahead. Also, an increase in the likelihood they're going to reduce their use of some products like biologicals and foliars as well. We're also seeing more farmers are saying they're going to, and that's kind of a group. Those three are in sort of their own group, so to speak, where we see less likelihood for cost cutting, which is, and they all have twos in front of them. So between not very likely and may or may not is restructure debt, purchase lower price seed, renegotiate rental rates or let rental land go, reduce fertilizer use, although that one did increase a little bit, cut chemical rates, staff reduction, and sell land. Sell land actually was in the ones, so not likely at all, which shows, again, we're making operational cutbacks, not systemic changes to our farm businesses. Okay, appreciate it. Let me know your feedback, shaney@realagriculture.com, or go to realagristudies.com as well. We'll be right back. We got a product spotlight with Syngenta Canada right after this.
Where are you running to?
Oh, hey. In Vigor. Book and buy.
Huh?
Oh, yeah. $30 off per bag. Ends November 14th. Gotta get down to our local retail.
What? Like a rebate on the eligible in Vigor hybrids we grew?
Yes. You coming or not?
Get in the truck. We'll get there faster.
Oh, thank you.
Hurry to invigorbookandbuy.ca for complete offer details. Terms and conditions apply.
If you're involved in the agriculture industry, it's important to stay informed on all the latest issues affecting your business. At RealAgriculture.com, we offer fast, reliable news, information, and insights to help you keep on top of all of the latest in Canadian agriculture. Visit RealAgriculture.com and sign up for our free daily newsletter covering everything from news, agronomy, animal agriculture, and much more. Visit RealAgriculture.com/subscribe today.
RealAg Radio is Canada's only daily radio show focused on agriculture. Get expert advice on Agronomic Monday. Tuesdays and Wednesdays will cover a broad range of issues. Thursday we'll hear from farmers across the country on the Farmer Rapid Fire. And we'll wrap things up Fridays with the RealAg Issues panel with Kelvin Hepner and Lindsay Smith. Join us Monday through Friday at 4:30 Eastern. And don't forget about the replay at 7 in the morning on Rural Radio 147, Sirius XM. Welcome back to RealAg Radio for this product spotlight with Syngenta Canada. Our guest is Wayne Bennet. Now, Wayne is the product marketing manager at Syngenta Canada. He's here to talk about what you get in the box when you buy your crop protection inputs. Spoiler, a bit of a spoiler alert for you. There's more than just the jug. Wayne's here to share more about the work that goes into crop protection and why it matters to you at the farm level. Wayne, it's great to chat with you.
Good afternoon, Shaun. Good to chat with you as well.
Yeah. So, hey, Wayne, tell me about yourself and what you do at Syngenta.
Perfect. Yeah. So I'm the product marketing manager here in Canada. I'm based in Guelph, Ontario. I've been with the company a little over 26 years, and I would say my team is responsible for the product marketing and product lifecycle management of our herbicides, fungicides, insecticides, and seed care and biologicals.
I guess let's talk about farmer success here. And obviously, we're kind of really all in this together to make sure we're taking care of some of the weeds and some of the bugs and all the things that are trying to take away and rob our yield. What is that you and Syngenta are thinking about when it comes to helping growers be successful? Let's talk about that.
Yeah, I would say first and foremost, ultimately our goal is to ensure that our growers are essentially growing the best crop. And what that means is we want to ensure that when our growers use a Syngenta product, they're getting what they purchase. We have a number of different things behind the scenes that we ensure that delivers product quality. There's a lot of quality testing that goes in behind the scenes to ensure that Our products live up to the standards that our Canadian growers are expecting. We ensure that the formulation is stable, the AI doesn't degrade over time, and as such. I would say even more importantly, Syngenta Global spends about $1.5 billion annually on research. And when you purchase a Syngenta product, you're helping to fund that research. Big part of my team's responsibility is to ensure that we can tap into that $1.5 billion US and focus some of that research here in Canada to tackle some of the leading economic challenges we see here.
Yeah. And the thing is, we know this is like not a fast process, right? It takes quite a while to bring new technology to the market, from initial idea through testing and all the kinds of things that need and approvals that need to happen. How do you know where to put your focus?
So I would say we put our focus on right across Canadian agriculture, not only just our cereals and canola business and pulses, which are some of the larger crops, but we also put a big focus on our horticultural products. In fact, we're actually launching 2 new technologies here in Canada in the next 12 months that will resonate within right across all commodities here in Canada. I think another big part of our focus here is that not only are we focused on bringing new technology, but a big part of our focus behind the scenes is about how do we maintain that existing technology. In Canada, our products undergo a cyclical review by the PMRA every 15 years, and our team of scientists behind the scenes is continually updating that level of science to ensure that we have freedom to operate and market access. And why that is important, because as you know, our farmers here in Canada are net exporters. We grow our crops and commodities and we export them to other parts of the world. However, we're also competing with other countries that grow those same commodities and are looking to export. So if those competing countries have access to tools that our Canadian growers don't have, they could be at a competitive advantage relative to Canada. So we're working behind the scenes to ensure that our growers here in Canada have that full freedom to access and ultimately help them compete.
Yeah, and what you're talking about there is from is MRLs, right? Maximum residue limits in terms of some of those export markets.
Yeah, that's one part. Just but let's say you could have a technology that may be more economical to purchase, and that grower has access to that older technology, whether it be a fungicide or a herbicide. And if that product is taken off the market here in Canada, all of a sudden they lose access to that tool. So we're really focused on bringing keeping that technology in the grower's toolbox.
You know, Wayne, that's an interesting point, because I think a lot of farmers and people in the industry just assume like, okay, so product XYZ is approved in Canada, farmers are using it, and that's just the way it stays. But it's actually, that's not the case. They're like, how often does this review come up?
Essentially every 15 years. However, there could be some science that happens in other parts of the world that will trigger a special review here locally, so that a review can happen at any given time, but a cyclical review happens every 15 years.
Yeah, great stuff. Well, hey, Wayne, I appreciate you joining us here today on RealAg Radio for this product spotlight. Highly encourage all of our audience out there to, when you walk into your local retail, to make sure you're asking about Syngenta product and these 2 new innovations that Wayne he's slipping those out there. He's not giving out much information, but he's definitely piquing our interest indeed. So we'll definitely be following that through the winter months. Hey, Wayne, thanks so much for joining us here today. Appreciate it.
Thank you very much, Shaun.
We'll be right back on RealAg Radio right after this.
Time to get excited about your fields again thanks to Excite Bio Yield Plus. It's a phosphate solubilizing ag biological that works on oilseeds, cereals, and legumes. For 15 years, we've been helping farmers achieve healthier plants and higher yields with our premium liquid inoculants. For more information on Excite Bio Yield Plus or one of our other premium products, call 1-855-948-3246 or visit excitebio.ca. That's XITEBIO.ca. At Excite Bio, inoculants and ag biologicals, it's all we do.
Peter Johnson at WheatPete, RealAgriculture.com. I'm the host of The Word, and I love doing The Word. I love the questions. I love the challenges. I love having to apply agronomics to all over the globe and areas outside of my normal jurisdiction. Also, I love the feedback the most, where growers challenge me, tell me about their plot results, help me to learn. The Word, absolutely the best part of my day.
Have you got your DeKalb seed booked? Book early and take advantage of savings with the DeKalb Rewards program. Visit DeKalbRewards.ca for more details. Okay, last week we saw Sask Crops and APAS put out a press release encouraging some changes as it applies to the amount of information and data that we're getting back to the farmers and the industry relative to something like weekly export sales of ag commodities. I had a chance to talk to Sask Wheat President Jake Leguee, farmer from Fillmore, Saskatchewan, about the topic, the why, and maybe the why not. Hey, Jake, how we doing?
Doing great, Shaun.
Okay, there was Sask Crops, which is all the crop commissions in Saskatchewan working on the grains oilseed side, working together, and APAS put out a press release talking about the need for increased transparency when it comes to grain export reporting. What needs to happen here?
Well, I mean, we've been operating in Canada at a significant information asymmetry for a long time. They've rectified this in a lot of other countries. The United States is a good example, but it's also been done in the European Union. The grain companies have access to quite a bit of data because they're making the sales. As grain companies get larger and consolidate more, they're going to be able to grow that advantage. As farmers, we just don't know. We just don't know where our stuff is going until quite some time after, a month or more. And even then, we still lack a lot of detail that you would get if you were a farmer in the United States.
Yeah.
So that's something that they've dealt with for a long time down there, and it seems to be working quite well. Farmers have access to export sales reporting down there, and that helps them make better decisions. Better information, in all cases, should help us make better decisions. And that's what we believe will happen if we can enact some sort of an export sales reporting program. So we started on this several years ago. It was a long-standing request of farmers from all across Saskatchewan. So what we were trying to figure out is, okay, what would this look like and how would it actually work? So we commissioned a report by Mercantile Consulting with a variety of other crop commissions here in Saskatchewan, along with APAS, to have a good look at this and try to figure out what would be the benefits, how would it work, and then we can figure out what exactly it is that we're asking for.
Yeah, now, look at this week. Yesterday, I get to work and I'm scanning through some of the grain marketing sites and people I typically try to listen to. China buys 3 cargoes, right? It's like in the moment. It's real. It's transparency of data. We don't have that necessarily in Canada. So I see the upside here. What's the opposition to this? What is the pushback to having more transparency when it comes to export sales data?
Well, the pushback that we've received so far has come from the exporter side. They feel that it would impact their competitiveness, that would put too much information out there and could damage their ability to, be successful, I guess, in buying grain from farmers at the best price possible for them, which I understand. But at the same time, this is working in other countries. You have a lot of grain companies that are doing just fine in the United States and the European Union. So their concerns over this, I think, don't match reality from what we're seeing in other places, in other jurisdictions. So I think that we need to find a way forward so that we can figure out a system that works. Because like I said, we've seen it work elsewhere.
Yeah, we have the same thing when it comes to the beef industry. There's no published box beef price, for example, from Canada. We rely on the U.S. number and extrapolate. And probably they're move in sort of tandem, but I again don't understand why we can't. Here's what the Canadian price was, and we're just professional extrapolators of U.S. data. Do you think that there's momentum behind this request, Jake, or are you screaming into the void?
Well, it's always difficult to say. Farmers have been asking for this for a long time, but does that mean that our message is going to resonate? It's hard to say for sure. We know that the benefits are significant. The report that Mercantile helped us put together on this was showing about a $56.5 million benefit annually for producers. And we know that that's a very conservative number. That's really trying to model out what it would look like for a Saskatchewan farm versus a North Dakota farm and how they might be able to take advantage of better basis pricing. But that's really not looking at maybe you change your crop mix a little bit this year, because you can see some sales that have gone through that kind of might have been a bit of a surprise to the market, but you can see it so much faster. So I think that there's tremendous benefits here. So the thing that we need to do is get that information out there, and whether, we need a little bit of help from our governments, both federal and provincial, I don't know. But I guess our hope is that by getting a little bit more information out into the marketplace here, the green companies will come around on this and see that this is something that the industry needs.
Jake, is there any opportunity to do an interim step where we do a pilot project on one of the crop types, or is that possible to kind of prove that, hey, we'll have an industry at the other side of this? This isn't like doomsday if we were to do this?
Well, that's a good point, Shaun. I mean, pilot projects have worked in a lot of cases, like interswitching. We've done pilot projects on that. The trouble is converting that into a long-term actual change. We're still struggling with interswitching to see that actually happen. Yeah. So pilot projects are no guarantee that it will actually change over, but we're never against giving something a try and seeing how it works, if that might help, make this transition actually happen.
Yeah, when Mercantile did their research, did they look across all crop types in Saskatchewan, or just focusing on pulses, canola, and wheat?
Yeah, I mean, what the ask is would be to have this type of reporting for all the major crops. So wheat, durum, barley, oats, canola, soybeans, corn, peas, lentils. Once you start getting into the really small crops, it probably does get a little bit more challenging, but on those major crops, it just makes sense.
Yeah. And we still see in the US example, we still see like destinations unknown, like, and then some of those gaps are backfilled later, or a lot of times the assumption is that's actually China, and things like that. And I think your point is well taken in the sense that this isn't Canada recreating the wheel here. There are other jurisdictions, countries that we ship to and ship to us that have this. And so not exactly sure what the roadblock is and how, what is the argument that it reduces competition? Is it just that there's not a lot of players, therefore they'll each know each other's business? Like, what's the argument from that standpoint?
Shaun, I tend to agree that I don't think the argument is very strong. We've gotten very firm resistance from that sector of the ag industry. The only thing I could say on that would be to talk to them and try to sort that out. We've been unable to really get good information on what exactly it is that they're objecting to, but it's been quite a hard no from them at this point.
Well, I got you, Jake. Harvest all wrapped up?
It is. Yep. We finished combining more than 3 weeks ago, early October, and we've been just going hard on trying to get as much fall work done as we can, because at this time of the year, you never know how long you're going to get, and there's always so much to do.
We're not too far from the snow, my friend. We're not too far from the snow. So, hey, Jake, I am sure that we will see each other several times through the winter meeting season. All the best to you, and look forward to chatting with you.
Sounds good. Thanks, Shaun.
If you've got some strong feelings on this one way or the other, I'd like to hear from you. You can call or text the RealAg feedback line, 855-776-6147. We're right back on RealAg Radio, Rural Radio 147, right after this. Built on over 100 years of seed innovation and unwavering commitment to farmers, Pioneer 100 Series canola hybrids deliver a step change in yield performance and agronomic traits. This isn't just better canola, it's different canola. Pioneer 100 Series. Contact your local Pioneer sales representative or visit pioneer.com/100 series to learn more today.
I'm Lindsay Smith, host of The Agronomist, and I want to thank you for tuning in for over 200 episodes of our beloved little program. Join me Monday nights, 8 p.m. Eastern on YouTube for our live and interactive agronomy Q&A. Each week, our guest panel will handle some of your toughest agronomic questions live, streaming on YouTube, Facebook, X, and RealAgriculture.com. Tune in Monday nights or go to RealAgriculture.com/agronomist and sign up for our email notifications and don't miss an episode.
And welcome back to RealAg Radio here on Rural Radio 147 Sirius XM. Have you got your DeKalb seed booked? Book early and take advantage of savings with the DeKalb Rewards program. Visit DeKalbRewards.ca for more details. Okay, let's dig in on a bunch of economic and market talk. We're joined right now by Trent Klarenbach with Klarenbach Research based out of Saskatoon, Saskatchewan. Hey, Trent, how are we doing?
Oh, I'm doing great. Shaun, how are you today?
I'm doing fantastic. I'm still recovering from the Blue Jays loss, but we'll get over it eventually here. We'll get over it eventually. You and I were texting back and forth. Now, we'll set the stage here. You've made some pretty big. You stuck your neck out there, I guess is probably the best way to put it. You got some thoughts on the future direction of land prices in Western Canada. You still holding fast on that?
Well, yeah, I do believe that the farmland value price charts will behave the same manner as every other asset class. And the challenge with making bold predictions is timing, right? And I don't make any I don't profess to know when this correction is going to begin or happen, but there's some interesting signs in the market that it could be happening sooner rather than later. So,
what was the number that you put on it?
Well, in the past we've had corrections of 50 and 60% as the two largest ones. And right now with the farmland values at a real level of interest, a technical level of interest to me on the price chart, it's, you want to get prepared for a pullback in land values. So these values are typically 50 or 60% retracements in values. And I think 50% is the low end of the retracement, and I think it could possibly be 60% at some point too. So
Trent, I hope you're wrong.
Yeah. Well, I don't, it's one of those things, I don't want to be right either, but my intention is to prepare people for a possible outcome. So
you had reached out to me because I had, I can't remember what initiated it, but I've always kind of been very fascinated by the fact that my perception is that U.S. farmland values are a little bit more sensitive to the movement in, say, the commodity market and things like that, where Canadian land values seem to, if you look at some of the FCC numbers, they just continue to increase. Now we're increasing at a decelerated rate, but we're still increasing. Any thoughts on the differences between the Canadian and U.S. farmland market?
Well, I got some ideas on that, and I really do believe that that Canadian wheat board that we had in Canada for 70 some years plays a huge part of that.
Huh.
What happened is just the inability to sell your grain, to manage your cash flows with the quota system, that really kind of came to head in the late 60s, early 70s, really introduced and really forced people to focus on some alternative crops such as lentils, canary seed, for example. And United States farmers, I don't feel they've had the pressures that we felt under the Canadian wheat board. And so as a result, we have a very diverse cropping rotation in Western Canada in comparison. And then you have the ethanol mandates that came out in the States in, when was that, 2007 to 2010, really ramped up. And you just don't have the same incentives to diversify your crops as we have had in Canada. And that was one of the second order effects of the Canadian wheat board. It really forced us in Western Canada to become diverse. And, when I was farming 20, 25 years ago, red lentils and green lentils and chickpeas were the moneymaker. The special crops that we grew were the money-making crops. The wheat was just the break in the rotation. And I'm not sure that's changed.
And because of the diversity, you think that that's why there's less sensitivity to some of those commodity market ebbs and flows?
I believe so. I haven't studied it from an economic or a mathematical standpoint, but it just stands to reason. If you're really susceptible to corn and soybean prices in the United States and large part of those areas, and they reflect our oilseed and grain prices also, but we also have lentils and chickpeas and canary seed, for example, that diversify our rotations.
I'm really curious long term because there's a lot of interest in a state like Montana, for example, to increase the amount of pulse acres, or look at the opportunities for canola. We could have more competition.
Yeah, interesting point. I've talked to some different pulse processors and exporters in the United States, and I think they have some frustration at the lack of adoption of some of these crops. And I don't know why you couldn't grow some of these crops in some of these other states. I don't know what those limitations would look like, but certainly the northern states are adaptable. Yeah, that would put a really so I did a catalyst video here a couple months ago of what would be potential catalysts for a drop in land values, and one of the points was, government policy, and I just highlighted the ethanol mandates in the states. If that was to get reduced or disappear.
That would hurt U.S. farm prices immensely.
And it'd probably force them to maybe grow some other crops that we're growing up in Canada, which would have a serious detriment on us in Canada, Saskatchewan, and Alberta too.
Yeah. Now, you follow the markets very closely from a technical perspective. A lot of times when we talk to analysts, we're talking fundamentals, supply, demand, the carry out, all those kinds of things. What are the charts telling you right now when you look at the broader market?
Well, it's, I like looking at Chicago wheat. I like looking at soybeans. I like looking at corn, obviously canola, but those larger markets, I think, really provide some insight of where these prices can go. And it was interesting, soybeans there, I started publishing a couple months ago, and that's, a rise in soybean prices. And I think last week I came out with a post suggesting soybeans are entering a news event territory. So as a technical analyst, you tend to believe that news follows the price. So the price chart's approaching a breakout of resistance, and sure enough, there was a news event. But so I look at those soybeans, I look at some of the wheat charts, and I think, geez, these things here, they might be consolidating and coming in, and maybe this downtrend is getting close to the end, and maybe there's some potential there in the charts for a rise in values. And I mean, the rising tide will raise all ships. If wheat rises, corn rises, soybeans continue, canola is going to rise too, and as will lentils. So.
Well, November soybeans, for example, which is the near month, has really been on a pretty good run of days here the past week or more.
Yeah, well, there is a real consolidation there that a typical chart pattern that suggests, I just say suggests, 'cause it's a game of probabilities, not certainties, but suggested a rally in the soybean price. And we certainly got that starting last week. So we had our eye on that one for quite some time, and it played out. So yeah, it could, once these markets start moving, you don't know how they're usually going to go further than we anticipate, and they also drop a little more than we want. So it's hard to guess when it's going to stop. So
yeah, now as a technical analyst, what do you get a chance to look at and see that maybe somebody that just follows the fundamentals doesn't? Like, what's the advantage of trying to read the charts?
Well, the advantage of the charts is there's only one. Well, there's volume and there's price, but really for me, the price is the most important factor, and that's the one known. And now I used to get frustrated on my own farming operation, and, even with my ag background, is this information we get, it's somewhat subjective. I'm not sure if it's accurate. I question the timing of it. By the time I get it, it's usually circulated through the industry before it's available on my computer. But so I question the accuracy, I question the timing of it, and there's a lot of unknowns. And when I look at a price chart, I see the price, and that's that's with certainty. That's what price is that corn's trading at today, or soybeans are trading at, and I know with that certainty. So I think for me, that I just like relying on the knowns, and I can't focus on the unknowns because they're too subjective, in my opinion.
And you've been doing something kind of cool, because a lot of times we talk about, looking at technical analysis, we're looking at futures traded commodities, because the availability of those charts on some of the different services is there. Where we don't have a lot of technical analysis is actually in the special crops. So if we look at something like lentils or chickpeas, we don't typically see technical analysis there, but you've been working on to change that. Talk about that a little bit.
Yeah, well, I started this probably 3 years ago, charting, red lentils, canary seeds, Kibuli chickpeas, mustards, the low volume, I would say, niche specialty crops. And there's not a whole lot of information, price data on them, but I got a process where I collect the information and I apply the same tools of technical analysis to them that I applied to corn or soybeans or canola or wheat. And it's remarkable how they behave in the same fashion, in the same manner. And it stands to reason, because the one common denominator is us humans. And like I repeat this quite often, but our behavior does not change no matter what markets we're in. So.
And are you just using cash prices then as the different data points? Because there's no futures market, obviously.
Yeah, you have to use cash prices, because price discovery is even, there's some subjectivity to that in the special crops also, right? There's no futures market. There's no one clearinghouse or exchange, for lack of a better term. So yeah, there's some subjectivity, but they trend the same as every other asset does. So that's what I chose to do. So
yeah, and if I guess as you look across the major commodities, is there wheat, corn, soybeans, canola? Is there a chart that right now it's the most encouraging? Maybe some would say has most bullish upside. Does one come to mind?
Yeah, well, that soybean chart does. That's certainly breaking out ahead of the other commodities, or the ones that I track anyways. But those wheat charts, I was really bearish a month ago, and that's starting to soften a little bit. I'm starting to see some glimmers of hope there that maybe this rally, could be coming to, or this downturn could be coming to an end. We could start a rally here happening. And so I like looking at corn, Chicago wheat as strong indicators of where the markets are going. So.
Great stuff. Well, hey, Trent, we got to have you back. I appreciate you joining us here today on RealAg Radio. Thanks so much.
Yeah. Thanks, Shaun. Glad to be here.
Great. I know it's difficult, but it is pretty cool to talk about some of the technical analysis when it comes to the charts of some of these ag commodities. Indeed, the very interesting stuff when it comes to the pulse technical analysis. I've never seen that. We need to follow up more with that with Trent here in the coming months. Okay. That was Trent Klarenbach with Klarenbach Research, based out of Saskatoon, Saskatchewan. Covered a lot of ground here today. Really appreciate everybody tuning in. What I want to encourage you to do is send me your feedback, your thoughts, your concerns, maybe a bit of a rant. You got a bit of a burr under your saddle. Maybe there's something from the Canadian Farmer Sentiment Index data that I shared earlier that's got you all riled up. I want to hear from you. You can send me an email, shaney@realagriculture.com. You can also call the RealAg feedback line or text it, 855-776-6147. Thanks so much, everybody, for getting real and getting connected with RealAg Radio. I got to get on a plane and get out of here and get to Toronto. Talk to you again tomorrow. Cheers, everybody. And welcome to the bonus section of RealAg Radio today, here on Tuesday, November 4th. It is budget day in Canada at the time of the recording. No clue what's in the budget. The update is happening later on today, but of course we'll have the full analysis and breakdown tomorrow on the program. The Globe and Mail, though, has a story about some of the rumors of what could be involved in the first Carney budget. And they're expecting it could include a $50 billion Build Community Strong Fund for local infrastructure focused on housing, transportation, and health facilities, such as hospitals and emergency services. The 10-year program will streamline existing transit funding and direct money to the municipalities and to the provinces. Finance Minister François-Philippe Champagne and Prime Minister Mark Carney are expected to position the budget as an investment plan to drive economic growth, even as the deficit could swell to between $70 and $100 billion. Expect them to use that word investment quite a bit. The budget will also feature billions in targeted savings, including the cancellation of Ottawa's plan to plant 2 billion trees by 2031. Contracts already signed, nearly half the target will be honored, but remaining funds will shift toward more effective climate programs. Other highlights include up to $1 billion to attract top researchers, new funding for the Business Development Bank of Canada, and increased investment in defense and research sectors such as quantum technology and the Canadian Space Agency. On defense, the government plans to retire aging military fleets to cut maintenance costs while boosting procurement under a new defense investment agency. Environmental groups, however, say that ending the tree planting program raises doubts about Ottawa's broader climate commitments. John Deere says its See and Spray technology covered more than 5 million acres in 2025, which is a sign of growing adoption for the company's targeted spraying system. Farmers using it cut non-residual herbicide use nearly in half, saving about 31 million gallons of spray mix while maintaining yield performance. Field trials across 7 U.S. states showed an average yield gain of 2 bushels per acre, with top results up to 4.8 bushels per acre compared to traditional broadcast spraying. Deere also expanded its application savings guarantee, letting farmers pay only if the system delivers measurable savings, and announced an unlimited use license for 2026. Big news on the canola front yesterday. Canada's Foreign Affairs Minister Anita Anand says progress has been made toward reopening Pakistan's market to Canadian canola after a 3-year ban. This is big news. Pakistan blocked Canadian canola imports in 2022 over GMO concerns, cutting off a market that once took up to 800,000 tons a year. Following a bilateral call with Pakistan's Deputy Prime Minister and Foreign Minister Mohammed Ashrik Dar, pretty sure that's not how you say that, both countries agreed to facilitate the resumption of canola exports and expand cooperation in energy and critical minerals. The meeting also marked progress on a foreign investment promotion and protection agreement led by Trade Minister Sidhu and Pakistan's Investment Minister. Officials say the deal aims to create a more stable and transparent investment climate between the two nations. Well, Canada's struggling with China and India. Find some friends. Pakistan, definitely, that's a good news story on the canola front from yesterday. Now, we talked about Prime Minister Mark Carney having his meeting with Chinese President Xi Jinping. One of the outcomes of that is not an agricultural outcome like a lot of farmers are hoping for. It has to do with tourism. So China has lifted its ban on group tours to Canada, marking a key breakthrough in diplomatic relations following Prime Minister Mark Carney's visit with President Xi Jinping in South Korea last week, the first between the Canadian and Chinese leader in 8 years. Beijing's foreign ministry said the move will promote people-to-people exchanges and deepen mutual understanding. Canada is being excluded from China's 2023 list of approved travel destinations amid tensions over alleged foreign interference and security concerns. That may have something to do with the fact that Canada did arrest the Huawei CFO going back in time. Tourism groups welcomed the decision. The head of the Tourism Industry Association of Canada said Chinese travelers are among our highest value visitors, typically staying longer and spending more. Prior to the pandemic, Canada hosted more than 700,000 visitors from China. Current levels sit at less than 60% of that. So good news for the tourism industry and some of the tourism hotspots that Canada does on the tourism side of the economy. Hormel Foods, the company behind Planters, Skippy, and Spam. You a Spam fan? Spam and mustard on a really good white bread. That's a fabulous lunch. It is. You believe me. Christy sitting beside me is like, no, it's not. It is. It is. But Hormel, they have announced it will cut 250 corporate and sales positions as part of a broad restructuring aimed at streamlining operations. Got to figure out ways to make that Spam cheaper. The Minnesota-based food company said it has launched a voluntary early retirement program for its non-plant workforce and will close several open roles while reducing headcount across office-based teams. Hormel expects to take $20 million to $25 million in restructuring charges, including pension benefits, severance, and stock-based compensation. Most of those costs will be recorded in the fourth quarter of fiscal 2025 and the first quarter of 2026. I think an equivalent of Spam is Prem. I remember as a kid, my grandfather, Maholko, he loved a good prem sandwich. And we would go fishing or we would drive out to the farm, help him out and all that kind of stuff. And I was just, probably like between 6 and 10 years old. I remember we would always pack a lunch and we'd be on the boat, doing as much fishing as we possibly can. And he'd pull out these prem sandwiches that I could never figure out why he made the sandwiches at the lake before we got on the boat, on the tailgate. It would kind of make more sense to do this all back home before you left the house. You had to pack all the condiments and do all this kind of work. What it was, he was hiding it from my grandma because he had a heart attack and he wasn't supposed to be eating this kind of stuff. And so that's how he hid it. He had a stockpile and was hiding all of it. And that's why the sandwiches are made on the tailgate. So yeah, we all eventually hit this point where we're hiding stuff from our wives like that, what we can eat. Okay, Archer Daniels Midland lowered its full-year earnings forecast Tuesday, warning that tighter crush margins are weighing on results, even as the company posted higher third-quarter profit and revenue. The agricultural commodities giant, a major processor of oilseeds, corn, and wheat, now expects adjusted earnings of $3.25 to $3.50 per share for the year, down from its previous estimate of around $4. Now, analysts had projected 3.76, so we're a little bit under where analysts expected. The CEO said the reduced outlook reflects margin pressure across ADM's core processing businesses, where the gap between input costs and product prices has narrowed. Shares fell 10% to $54.29 in pre-market trading following the announcement, though the stock remains up 20% on the year. Following the earnings front, BNSF Railway posted solid third quarter results, with revenue up 2% to $6 billion and net income rising 5% to $1.4 billion year over year. The railway credited the growth to higher intermodal and agricultural volumes and stronger pricing, which lifted revenues per car by 1%. Consumer product shipments rose 2% on a rebound in West Coast imports and auto production, while agricultural and energy products also saw modest gains from improved grain exports. Industrial and coal volumes each fell about 2% amid weaker construction and mining activity. BNSF's operating ratio improved to 64.1%. That's down from 65.1% a year ago, marking continued efficiency and cost discipline across its network. And if you are interested in just what's going on in the rail sector, encourage you to go back to RealAgriculture.com and check out my interview with Anthony Hatch of Hatch Consulting. Really cool interview talking about, and in those BNSF earnings that talked about, the efficiency and cost discipline. And that again refers to this period in the railway sector of precision railroading. Hunter Harrison really drove it. And how we've pretty much extracted all the costs we can, unneeded costs, out of the system, and where do railways go from here. Fascinating interview. Encourage you to check it out. China has suspended all retaliatory tariffs on U.S. farm goods, including soybeans, under a new trade agreement reached between President Trump and Xi in South Korea, effectively restoring U.S. access to the Chinese market. The move places U.S. soybeans on equal footing with Brazil's, as both now face only China's standard 13% value-added tax of VAT. Earlier 25% retaliatory duties from 2018 technically remain, but are neutralized through an extended tariff exclusion process valid through December of 2026. Beijing also committed to buy 12 million metric tons of U.S. soybeans in late 2025 in these last 2 months, November and December, and an additional 25 million metric tons annually in 26, 27, and 28. So now what's interesting here is there is some skepticism that the market has here. Will China follow through? Is this just more promotion from the White House? Do they actually have a deal? But there are ships moving. It's been encouraging a week here of what we've seen in terms of activity and what I've been hearing from market analysts and from some traders. So off to a good start. Everyone's gonna be watching that follow through very, very closely. Soybean market has definitely responded based on this news in the past week. If you look at some of those charts. The Financial Times reports that while both Canada and Mexico are being hit by President Donald Trump's sweeping tariffs, the two economies are charting very different paths. Mexico's industrial base, led by hubs such as Monterrey, is holding up relatively well. Its lower labor costs and growing nearshoring role have kept U.S. manufacturers dependent on cross-border supply chains, softening the blow from the 25% tariffs. Financial Times continues by saying Canada, meanwhile, faces a harsher impact. With its deeply integrated auto, energy, and lumber sectors, analysts warn of an export decline of up to 28% and rising recession risk if tariffs persist. Ottawa is under pressure to defend domestic industries, even as Prime Minister Mark Carney pushes trade diversification to reduce reliance on the United States. Diplomatically, Mexico is cooperating with Washington to preserve manufacturing links while Canada faces stalled progress with both the U.S. and China. Carney acknowledged that lifting Chinese tariffs on canola and other Canadian goods will take time, despite what he called a turning point meeting with President Xi Jinping last week, like we already talked about. Meanwhile, Trump's tariff powers under the International Emergency Economic Powers Act, IEPA, face a Supreme Court challenge. Even if the law is struck down, U.S. trade officials plan to use other tools like Section 301 and Section 232 to sustain protectionist policies, a shift that could reshape North American trade and investment for years to come. According to the Financial Times, kind of the bottom line here is Mexico's cost advantage offers a cushion. Canada's high-cost U.S.-linked economy leaves it more exposed, underscoring the region's growing economic divergence under Washington's tariff regime. And there's been a lot of focus on, I mentioned this on Friday's show twice now, in August and then in the end of October. Canada, trade negotiations with Canada off, kind of an abrupt end to it, like things are bad. Well, I'm not sure we're ever going to come back to the table. But the U.S.-Mexico, that trade negotiation is kind of in the same boat, except it's a little bit softer language. We're extending the talks. At the end of the day, they're both in the same position. But what the Financial Times says here does make a little bit more sense because of the low-cost labor environment that Mexico has and how that is a complement to supplying product to the U.S. in comparison to what some of the limitations that Canada is under. Global fertilizer prices are climbing again as China's export restrictions and European tariffs on Russian and Belarusian supplies tighten markets and fuel food inflation fears. International DAP prices hit $7.95 a ton in August, up 34% year to date, as Beijing halted urea and phosphate exports to secure domestic supply amid trade tensions with Washington. China accounts for nearly half of global phosphate production, making its policy decisions especially impactful. At the same time, EU sanctions on Russian and Belarusian potash have constrained global supply, raising costs for farmers. The USDA estimates fertilizer makes up nearly 35% of wheat and corn production costs, meaning any price surge can quickly ripple into higher food prices. And here, this is a little bit of an example where Canada does have some leverage. 85% of the potash used in the U.S., it comes from Saskatchewan. Not just Canada, it comes from Saskatchewan, one province. In fact, if you look at the potash that's in the ground, you couldn't have planned the Saskatchewan border any better. It absolutely follows where the potash is. So this is one of Canada's leverage points. And you listen. Does the U.S. need Russian and Belarusian potash? I'm not so sure. Just buy more from Canada, but maybe that's just too simple. The Canadian Food Inspection Agency has formed a U.S. risk task team to monitor rising food safety risks as the U.S. Food and Drug Administration faces major staff cuts, looser oversight under Health Secretary Robert F. Kennedy Jr. Internal documents, this is from the Globe and Mail, internal documents warn that U.S. deregulation could raise the risk of contamination, animal disease, and pest outbreaks in food imported to Canada, which relies on the U.S. for over half of its agri-food supply. The task force will track changes, share intelligence, and prepare for possible communication breakdowns with U.S. regulators. Experts call the move proactive, but caution that CFIA's own budget constraints may limit its response capacity. The agency also worries the U.S. withdrawal from global science-based bodies could weaken international food safety standards. So this makes sense. They would set this up, maybe more marketing than reality in some ways. CFIA has had its own, and Health Canada have had their own bout of not necessarily following the science and doing things for political reasons. So, I just kind of wonder if this is more some messaging. Kind of fascinating. And in terms of how this is communicated, this is one we're going to definitely need to follow at a time where the industry probably wants to see more regulatory parity, right? And not going in different directions for these two major trade partners. U.S. Agricultural Secretary Brooke Rollins says she's not yet comfortable reopening the border to Mexican cattle as officials work to contain an outbreak of the flesh-eating New World screwworm parasite. Speaking in Mexico City after meetings with President Claudia Sheinbaum, Rollins told Reuters that while Mexico's containment progress has been very encouraging, the U.S. is still taking a cautious step-by-step approach. The outbreak, which began in Central America, has moved north into Mexico and threatens to cost the U.S. cattle industry up to $1.8 billion if it crosses the border. The U.S. has largely halted the live cattle imports from Mexico since May. There's like 1 million feeder cattle a year that we're talking about here at a time where the Trump administration is very focused on the beef price and from a consumer perspective, which President Trump has talked about quite a bit. And finally, 13 stories in the news today. The Environmental Protection Agency, the EPA, has again postponed finalizing the next phase of renewable fuel standard mandates after the public comment period closed on its proposal to reallocate blending obligations from small refinery exemptions, better known as SREs. The comment period ended October 31st, so last Friday, which was also the legal deadline for setting 2027 renewable volume obligations, those RVOs, rules that must be finalized 14 months in advance. EPA admitted that timeline is no longer achievable. Pick it up, EPA. Let's go here. The proposal would reassign blending requirements previously waived for small refiners, directly shaping RVO targets for 2026 and 27. However, progress has slowed amid the broader regulatory backlog from the U.S. government shutdown impacting. So this whole idea, I've seen a lot of people, has anybody noticed there's a shutdown? Not impacting me. No way. It has an impact. We got air traffic controllers working for free. I got to fly lots of times here in the next 4 months. I want the air traffic controllers to be happy, fat and happy, well paid. It's a stressful job. I don't need any none of us need any mistakes when it comes to directing air traffic. So that's all the news. There's a lot in there. A little bit longer top ag news of the day segment. I want to hear your feedback on these issues and more. Maybe there's something we missed. Maybe there's something maybe you have a different opinion in terms of some of the impact of some of these news stories. And remember what I said at the beginning of the show today. The secret between you and me. You call or text that RealAg feedback line, 855-776-6147. We'll send you a RealAg hat. How about that? That's a good trade. Your comments, your perspectives, your thoughts for a RealAg hat. Deal. 855-776-6147. Tomorrow we'll be broadcasting from Toronto, Ontario, home of the Toronto Blue Jays that we're still recovering from. And Friday, it's going to be a lot of fun. We'll be back in Red Deer at AgriTrade, broadcasting from the Crop Management Network booth, I believe, with Helena Agri Enterprises. Looking forward to being with our friends from Helena. We'll be talking about humics and some of the other products that they are bringing to Canada, so looking forward to that as well. Thanks for tuning in. Thanks for downloading the RealAg Radio podcast, and we'll, of course, chat again tomorrow. Cheers, everybody.